Hello and welcome to the Weekly Forex Outlook at XM.com. It will be a packed week with interest rate decisions from 4 central banks, including the Bank of Canada, the Fed, the Bank of Japan, and the ECB. The Fed will certainly be in the spotlight amid the ongoing U.S. government shutdown. What will all this mean for the markets, and what should traders watch out for? I'm Maria Pachardis, and joining me to unpack all this is lead market analyst Rafi Boyadjian. So Rafi, before we dive into what's happening in the States, let's begin in Canada, where the BOC will kick off the central bank bonanza. At its last meeting, the BOC cut rates by 25 basis points. What do you think policymakers will signal this time, and how might that impact the loonie, taking into account how relations between the US and Canada are souring again?
Well, Maria, that is right. We did see the Bank of Canada resuming its rate cuts after a 6-month pause in September, and it is expected to cut again in October. We actually had pretty strong signals from Governor Macklem very recently, where he said that at the next meeting, policymakers will be putting the emphasis on the risks to the economy. And this comes, of course, after the data that showed that the Canadian economy is really struggling under the weight of Trump's tariffs. We saw GDP contracting in the second quarter. We might see maybe somewhat steadier growth, maybe a bit of a rebound in the third quarter, but overall, the outlook is not looking great at the moment. There were hopes that the US and Canada were very close to reaching a trade deal, but in the last minute, President Trump has terminated the talks. He was angry about a tariff advert being shown in Canada, an anti-tariff advert, and that's really seems not to have gone down too well with the US president. So obviously now the Bank of Canada has even more reason to worry about growth. However, I think if there's going to be any upside for the Canadian dollar from this meeting, it might come from maybe the BOC refraining from giving too many signals about further rate cuts, because we are seeing a bit of an uptick in Canadian inflation, both in the headline figure and in most of the underlying measures. So the Bank of Canada might try to keep its options open by not pre-committing to any further cuts, and so I think that's the best we can hope for the Canadian dollar.
Moving over to the US now, the ongoing government shutdown is about to enter its 4th week. Are Democrats and Republicans any closer to finding a middle ground? And how might the shutdown affect the Fed's next moves? What are we likely to hear from Fed policymakers on Wednesday?
So indeed, the shutdown doesn't seem like it's about to end anytime soon. In fact, the senators have left Capitol Hill for the weekend, so it's almost certain it's going to be dragging into a 4th week. And there's talk that it might last until the end of November. So let's see what's going to happen. But for sure, the longer it drags on, the more impact is going to have on the economy. In terms of the temporary layoffs, in terms of government agencies deducting from GDP output. Usually this tends to be quite minimal, but obviously the longer it goes on, the more the Fed is going to be paying attention to it. I think for the Fed, the bigger concern is the fact that they're unable to have access to crucial data such as the payrolls numbers. And next week, we might see some all this kind of impacting the Fed decision making. So the Fed has signaled that they are moving towards another cut at their October decision gathering. Fed Powell was somewhat more dovish in his most recent remarks, and other officials also seem to be falling in line with the view that another rate cut is needed at the October meeting. Now, of course, we're not going to be getting a new dot plot at this meeting, so there's not going to be any sort of new projections, but obviously investors are going to be paying attention to Powell's press conference for what Powell's views are on the economy, on the inflation picture, and so the concern is that the Fed is saying yes, we might be able to overlook inflation risks for the time being because we're we're more worried about the labor market, but I don't think the Fed is going to be able to maintain that stance if inflation refuses to come down to 2% over the next few months. For now, though, I think the focus is pretty much on the labor market, and I don't think Powell is going to say anything that's going to rattle markets. So on the whole, we might not see a huge reaction in the US dollar. Of course, if there are sort of some unexpectedly more dovish remarks regarding the economy, regarding the labor market, that could potentially weigh on the US dollar, and it might potentially boost stocks on the prospect of steeper rate cuts. But on the whole, markets seem to be too dovishly priced in compared to where the Fed is, what the Fed's position currently is. So at some point, even if it doesn't happen at this meeting, there is a chance of potentially the dollar recovering a little bit if the markets see that the Fed is going to be quite as aggressive as they're expecting.
So if, as you mentioned, the government shutdown is not likely to end over the coming days, what impact might we see on next week's data?
So next week's data is once again going to be disrupted. We were due to get the advanced estimate of the third quarter GDP growth. We were also due to get the PC inflation numbers. It's unlikely that these reports will be getting released, but we are going to be getting some survey data. We might get the consumer confidence survey as well as the Chicago PMI. And so, if there's any indication that we are seeing maybe a bigger impact from Trump's tariffs on the economy, it might offset maybe some disappointment from potentially not so dovish Fed, but on the whole, I think we're not going to get any new revelations from the incoming data over the coming week.
Turning to Japan now, the BoJ will announce its policy decision on Thursday. What can we expect to hear from the bank given the appointment of the new Prime Minister, Takaichi? And what reaction do you think we'll see in the yen?
So yes, we do have a new prime minister in Japan, the first female prime minister, and actually Sanae Takaichi she didn't really waste any time in basically asserting her policies. She basically, in her first press conference as prime minister, she did say that the government is working on a new fiscal package. Now this tends to be obviously positive on growth, and therefore you would assume that markets would scale up their expectations of Bank of Japan hiking interest rates, but she's in fact opposed to the Bank of Japan moving in too quickly in terms of normalizing policy, and there were hopes that the Bank of Japan might surprise us with a rate hike at their October decision meeting. There were some hints that a lot of policymakers, a lot of board members were quite worried about delaying a rate hike any further, but that seems unlikely now. Not to say that we're completely ruling out a rate hike, but if it's going to happen, it's not going to happen in October, more likely to happen at the December meeting. However, this meeting could still be interesting because the BoJ will be publishing its latest quarterly forecast. So any upward revisions to inflation and growth, I think it would reflect a growing confidence by the BoJ that it is close to meeting its 2% inflation target sustainably. And I think it's going to be hard for the government to pressure the BoJ not to raise rates when inflation in the country continues to be closer to 3% than 2%. And so potentially, we might see some appreciation in the Japanese yen should the BoJ give us, fairly strong hints that, yes, they're going to hold rates for the October meeting, but they are getting closer to the next rate hike.
And finally, the ECB will also meet on Thursday. Can you tell us about the current state of the Eurozone economy and what that will mean for the ECB's rate decision and the euro?
Indeed, so we've got another policy decision on Thursday. The ECB is not expected to make any changes to its interest rates. The deposit rate has been at 2% now since the summer, and I think that's a pretty, as the other governing council members have said publicly, that's a pretty good level to be at the moment, given that inflation has been hovering around 2% target for a while, and we're seeing the economy proving somewhat more resilient than in terms of the worst case scenarios from the potential impact from Trump's tariffs. So I think the ECB can afford to stay on hold. I think they would want to preserve some firepower in case, say, things were to deteriorate at a later stage. But for now, I think they've got little reason to cut. I don't think we're going to get anything we haven't heard already from President Lagarde in a press conference, but investors might still pay attention to the upcoming numbers. We've got the flash GDP figures expected on the same day as the ECB meeting, and the flash CPI numbers the following day. Any surprises there might move the euro, but on the whole, I think we're not going to see policy expectations change much next week.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.